Hello, my name is Oliver from Lux Trading, and today I will show you how our relative drawdown works and why you don't have to be afraid of it. First of all, I'm going to explain what a relative drawdown is and how it differs from a fixed drawdown. In trading, drawdown refers to a reduction in equity, and it is usually expressed as the percentage change between peak equity and low equity. To put it simply, it's a period of time when the trader is losing. So what is the difference between relative and fixed drawdown? The difference is that with a fixed drawdown, it is based on the moment you start having an account. If you have a fixed drawdown of 4%, then you know that if you go down 4% from the initial balance, you get out of the program. Relative drawdown works a little bit differently. It means that with your profits, your drawdown limit grows as well. Let's say you make 2% profits. Your drawdown will not stay fixed, but it will grow with those profits as well. This is done in order to safeguard the profit you've already made on your account, and so that you don't get into a bigger drawdown than necessary. This kind of drawdown is used in the asset management industry, hedge fund industry, and the banks. It's the standard. It is used because the most important thing, as I've mentioned on this channel so many times, is keeping your risk low. So why are people scared of it? I think it's more of a mindset. A lot of people are afraid that they'll reach it pretty quickly, and they get peace of mind when they have more wiggle room. But trading isn't something where you should have ease of mind, because in trading you should always be concentrated and focused, and you should always know what your risk is. It doesn't change anything if it's fixed or relative. You should not risk more just because of all of a sudden you have a fixed drawdown, you made some profits, and now you have more space. That's not the right way to go about it. The correct way to go about managing risk is keeping the risk percentage the same. Keep to the same lot sizes, risk sizes, stop loss sizes, and you'll be alright. So why is it important to use a relative drawdown? Well, first of all, it makes you more focused. As it grows with you, you have to keep an eye on it. Also, it helps you to keep your profits, locking them in and not letting you lose the money you've already made. You as a trader don't want to start every month over and over and over. Once you make those 2%, 3% of profits, you want to safeguard it. You don't want to lose that anymore. That's why relative drawdown prevents you from doing that. Another important thing to mention is that auditors like KPMG, which we use to audit our trading accounts, will look at your drawdown first. They want to see how much volatility there is in your balance and how big of drawdowns you get in. The smaller, the better. The smaller, the more investors you'll be able to attract. Secondly, they will look at what your risk to reward ratio is, if you're cutting your losses quickly, and what you do when positions go against you. Now, we often get people asking if they can keep their profits in their account to increase their drawdown limit. Well, this is not a good idea. Firstly, because when you make 10% on the account, you scale up anyways. And in the professional stages, our drawdown is a hybrid model. That means that each month we will pay out your portion of the profits. So for example, if you make 2% this month, we pay you out your share from the 2% you've made, and you only need to make 8% more. You start with a fresh new drawdown, and this helps you to keep your trading consistent and to manage risk properly. So at the end of the day, in the professional account stages, it works a lot like a fixed drawdown, but we make sure that the profits get to go home. Another thing with the mindset of people coming from the retail trader pool is that we see that they're trying to take a lot of risk. That is completely unnecessary when you're trading for a proprietary trading firm, where you'll be able to get funded with big sums of money. Any family office, bank, hedge fund, or an asset management department will be more than happy with you making 1-2% a month. To sum everything up, relative drawdown isn't as scary as it seems to be on the first look. It helps you secure the profit, and when you withdraw, it works a lot like a fixed drawdown, where you basically go to the same value that you started with. And mindset is the key to success. So that is it from me today. If you have any more questions, leave them down in the comment section. And if you want to learn more about Lux, feel free to reach out to us on our 24/7 live chat or send us an email at info@luxtradingfirm.com. My name has been Oliver, and I wish you all a successful day trading. Have a great one.